shifting now gears to the economy a bit. So you've got folks like Ray Dalio comparing this event to the Great Depression. Warren Buffett, he had his annual meeting for Berkshire Hathaway last weekend, but he was much more optimistic, saying, don't bet against America. We're going to come out of this. He had a much more positive note to this. So what are your thoughts?
I think they're both right. I'm fans of both. I've talked to both. Ray tends to look at history and look to see where this is a replication of the past. And, the one difference in Ray's scenario versus the past is the liquidity that the Fed immediately injected into the economy. So now you're seeing the stock market up. You're seeing, investors have access to capital to be able to invest in things. The challenge is you can't do it fast enough to replace 30 plus million jobs, 50 million people who are underemployed, which is why I believe we need federal jobs programs. All that said, we tend to figure these things out, which makes me agree with Warren Buffett. I mean, when our back is against the wall, if you look historically, whether it's us, whether it's UK, go back to the history of London and World War II and bombs dropping and the city being destroyed, or, the Civil War here. We just have a history of innovating our way out of these problems. How quickly? I don't know. But do I feel like, 5 years from now, we'll be back to where we were 6 months ago? Yes. 10 years, we'll be way ahead. 2 years? I don't know.
So how do you explain what's happening in the markets? I mean, there's a disconnect, right? 30 million plus people out of jobs, and the market keeps going up. So how do you?
Two reasons. One, where else do you put your money? And two, there's plenty of liquidity to create lots of money to put into the markets. And so the bond market hasn't gone crazy. You don't see rates going up. You see them still trending down. And then if you're an international investor, where else would you put your money if not the USA? So, do I think this is going to stay where it is? No, because I think a lot of this is momentum investing. And so because there's enough liquidity that people are able to borrow money, companies that we thought would need bailouts because the liquidity was injected into the markets recently, like Boeing's able to borrow $25 billion at 5 or 6% interest rates, which seems crazy low, all things considered. But because that liquidity is there, investors now don't seem to think that any of those businesses that are holding up the market are going to go out of business. And then, in the interest of disclosure, my big holdings are Netflix and Amazon, who are benefiting from all this. I got lucky, knock on wood. And so, but all that said, other than those key holdings and some other little things I have, I've tried to go to cash because I do think those momentum investors will clear out. And when those momentum investors clear out, there won't be enough cash just to hold up the market, right? Because a lot of that cash has been invested, and either that cash has to clear out, which just pushes the market lower, or just stays what they are and gives it a little bit of support. But I just don't think that even with the borrowing, a lot of these companies are going to be able to sustain what they had in the past. And so if I had to guess, if I had to bet, which I guess I am by going mostly to cash, I'd say that we're going to see another leg down. And historically, you've seen that too. You saw that, 2008, after some of the bankruptcies that started the Great Recession. You saw that in the Depression era. Somebody said you even saw that in the 1870s. That I don't know. So, yeah, so that's my bet. But if I could easily predict the markets, I would just tell you. I wouldn't have to guess.